Hello, my name is Layla Andrews and welcome to my weekly analysis for the week commencing the 29th of October 2017. Today I'm going to be looking at dollar yen and euro dollar. I'm going to, of course, start with the monthly chart and give you a quick recap of where we have come from and how that might be affecting where we are going. That's something that I usually do when you're looking at a time frame for the week ahead and you are using the weekly. It's also a very good idea to look at the time frame above, which in this case is the monthly. Plus, also, we are actually at the point where we're going to be coming to the end of wrapping up October's bar. On Tuesday is going to be the last day. So there's going to be a little bit of insight, perhaps, into what the current price action is looking like, and we may see something a bit similar. It also gives you a little bit of a feel for what this market might be trying to contend with. So in terms of that, I want to just give you a quick recap of where we've come from and where we look like we might be going. So we've had concerted bullish pressure to the upside, obviously. We had a little bit of a pause followed by a similar move up. You would call these leg 1 and leg 2. And then we had obviously a resistance point at around about 125, and we've been in a sell-off period. Since hitting the 100 round level, which is just here where my cursor is, just underneath here, which was a well-defended area, we've been in a steep buying period followed by what I would call a fairly uncommitted sell-off period. And by uncommitted, I'm talking about the amount of momentum that is in this pullback, if you like. I'm seeing this as a push up followed by a bearish pullback. Obviously, you would have a bearish pullback in a potentially in an uptrend, followed by what might be the beginnings of a continuation of this move here. Now, the reason why I am reading this in terms of commitment, if you like, and commitment to the direction, is that every time this market tried to sell off, it found itself being somewhat defended, particularly around the 108 level, which is this level here, which also coincides with the monthly 50 EMA. And every time price sold off into it, it found some support, and this was when buyers had their orders and the market got pushed up. We also did find that conversely, on the side of the 114 level, every time the market pressed into that, we had a sell-off. So you have a bit of a mixed bag of price action where you've got wicks on the top and tails on the bottom, generally meaning that most of the bodies of the price action is confined to quite a small zone, just around the 111 area. So it's almost like a pivotal point, if you like. Anyway, my general thought about this was, and this goes back to my thoughts on cycles being pretty much the most important thing on a chart. This goes back to my thinking that this is a concerted bullish move followed by a fairly weak pullback, followed by potentially a continuation, with the idea of at least trying to get to these match this high at around about 125. Now, we've got a fair few number of obstacles to get through on the way to that, but overall, looking at what we had for September, which is this green bar here, there's definitely a change compared to where we were, in as much as this is a big bar, it's got a pretty long tail, and it's got a fairly solid body, and it looks rather different to the other bars that have come before it. So this to me was the shift, if you like, from being a fairly kind of, I don't know how to describe this really, a shambolic kind of attempt to move lower. This actually was the first time that it looked like it had got a bit of clarity about the direction. And in as much as we can see this one is clarity about direction, this now has become clarity about direction. We had some sort of indications here, but they never really came off. These opportunities never really fully played out. So this one, if you like, has theoretically looked like it's going to play out for October, because we've only got a couple of days left. Now, it's of course true that this bar here may end up looking completely different, particularly if Monday and Tuesday we have dramatic selling on dollar yen. Then this bar will end up as a seller's bar, because it's not particularly big, and it's not a big ask to get it down past its open point, which is basically 112.60. So to get it past that point and this become like a red doji would of course negate some of what this price action is indicating, which is much more bullish intention. And as I say, if this bar was to close as a red doji, that would certainly put a dampener on my idea about this moving to the upside. However, if we have a bar which is able to maintain, at least for the next couple of days, Monday and Tuesday, maintain its price level around this, then we will have a little bit of a bullish bar, which could well indicate that we might see by the end of November another green bar that has actually managed to take out this level, which is clearly where the market has been before and had problems. So understandably, it's not broken through it at the moment. Now, I've got some thoughts about timing as much as anything else, which I think need to be discussed as being possibly pertinent at this point. So let's just have a look at the weekly and talk about this timing aspect. And by that, what I mean is basically this. We've gone from being sort of lower highs and lower lows in this particular instance here to going more or less sideways. So we've gone from selling to basically being range bound between, as I said, 108 and 114. So we've had this quite powerful looking momentum bar a few weeks ago. Price pushed on through, made a higher low here, which was very important, as confirmed by the week before this one. And we had a good concerted bar, and theoretically, logically, you'd expect to see some sort of continuation after this, not least of which is because we've actually made a higher low, and that's really, really important. But also this is closed above these closes, if you like. I think it's just about managed to take out this high as well, only just. So you could expect a degree of continuity. However, my feelings, and this is really just conjecture in some ways, but I'm going to say that I think that what's happening is that because we had neared the end of the month, it was more or less about there being a lack of buyers in this market, coupled with people wanting to exit on the basis that they need to tie up their accounts for the month. They need to wrap stuff up, if you like. So this was much more about there being just a lack of buyers rather than there being an awful lot of sellers at this point. However, it seemed that this was probably appearing to be a logical point because we've been here on a number of occasions, at least twice before, where the market has sold off from this point. So, if you like, this seemed like a logical area to exit the market. And I think this is more about exiting than it is about there being a massive influx of sellers at this point. So the reason why I'm saying that is because theoretically what we might see in technical terms is a missed opportunity, because normally we would expect to see, after making a higher low and a big bullish bar like this, we'd expect to see some continuation, but we haven't. So I'm saying that this might have some, this might be deceptive, in as much we might then see that next month does actually continue this process of where we found support here, we've pushed through, higher low, found some support here where the EMA is all in the right order. We've got the 50, the 20 and the 10 all correctly underpriced, which is a very supportive position for obviously EMAs to have got themselves into after having been basically running through the center of a range as almost like a pivot. These are now correctly ordered. So I'm wondering if we need to be a bit thoughtful about the fact that although this is a seller's bar, we might be trying to process a move through 114 to then connect with 115, which obviously is to do with this structural point here and here, to break through 115 to actually get towards this level that we want to, which is 118, which would of course give us this matching high. How we do that, we're going to have to read that on a week-by-week basis or a day-by-day basis, depending on how you like to read your higher time frames. But overall, I just wanted to point out that although normally I would see this as weakness, I think this is actually to do with timing, and it's to do with it being at the end of the month. So I'm a little bit wary of having ideas about this market having a sell-off to somewhere around this pivotal point, but that would of course take out this low. The pivotal point being 111. If we had a sell-off here, found some support, we do still have a higher low compared to this, and so theoretically it's not like it's going to change my overall picture, but what it might do of course is push the potential moving through this zone might push this back a bit, if you like. So we would then have to have our sell-off period, pick up some buyers, and then re-attack it, and that could take a lot longer rather than us trying to attack it from where we are, which could happen in a much more quicker period of time. So just bear in mind that there's as much to do with this fact that this is a level that has been well respected for as a resistance level, that almost immediately, well, it's 100 pips, but almost immediately moves into the next resistance zone at 115. This also is a fib level of 618. So this whole area, to me, seems like a logical place for everyone to say, you know what, I'm just going to get out of this market, and I'm just going to tie up my accounts and get my my house in order, if you like, before the new month starts. So I think there's an element of that involved, and I do think that can give you sometimes a bit of a false impression of the price action. So I'm trying to view this as a pause. However, if we do see concerted selling to the downside, then this really is a well-defended level. More sellers will have stepped in, and therefore you can temporarily view this as a selling off period. And just bear in mind that this is obviously slightly counter trend, so these moves to the downside could be short-lived. Just watch out for that. That's all I would say. Simply because we've come from a strong level of support, we've had momentum, we've put in a higher low, so everything about this does indicate that for the time being it's about higher lows and higher highs, therefore to the upside. So the pullbacks should be, if this process is going to continue, these pullbacks should be slightly short-lived, as in a couple of bars, maybe just one. But this one's going to be quite a difficult one to read, so you're going to have to read it on in the way that the price actually deals with this 114 level. If we quite early on start getting through this level on the daily chart, then we could well see this process actually continuing as it should do in terms of a technical point of view. Now, I know that might not seem hugely clear, but I wanted to talk to you about it because I thought it was an interesting discussion worth having about this concept of price action versus timing, and that sometimes there's hidden information in what we're looking at, and I did want to bring that to your attention. So that's why I've discussed this one, not because it's the easiest chart to read, and not because I think it's I've got a really clear sense of the direction here. I thought that it would be valuable for you guys to hear that there are ways in which price action can mislead you a little bit. So anyway, this will be an interesting one to watch, so I will be looking at that again next week. I don't know if I'll be talking about it, because if it hasn't changed a great deal, there won't be a great deal to say, but I will be looking at it, and I suggest you watch how it plays out as well, because you'll learn a lot from that. Okay, so now let's go to Euro-Dollar, and Euro-Dollar monthly is doing exactly what it should be doing. In very simple terms, just ignore all these lines if you can. In very simple terms, just look at the number of green bars. We're due for a pause. I mean, in the simplest terms, that is how I have seen this. That it came to a logical connection with a 200 EMA on the monthly, and it's had a bit of a pullback. That's all I see here, and it's really nice and simple. There are, of course, areas, hence the levels, which we will look at more closely on the weekly. There are levels which are possibly going to play a part in this market finding moments where it wants to stop, or that's the point at which the bar will close, etc. And so that's why they're there. But overall, my bigger picture thoughts on this is that we've had concerted buying. Very important that we remember that, because we've been in a range, and theoretically from this range we could have continued lower, and we did not. We found a floor and we broke through the range. See, we've made a higher high here compared to the highest high that we had in the range, which was there. So this market has, well, the bigger picture has bullish intentions. The fact that it's going through a pause and a pullback for now, again, makes complete sense to me. My feeling is, and with this one, it's just got to be read in very simple terms. My feeling is that we could well see continued selling into the 10 EMA, which is basically around 1400, and there are a number of time frames that have got various EMAs coming into this 1.14 level, which also coincides with a 382 of pullback from this whole move up. We then would be making a 38% pullback, if you like, down into support at the 10 EMA. Now from here, of course, there's a number of things that could happen, but we will have to deal with that when we get there. So that's my sticking my neck out kind of hypotheses of what I see, because it's just very simple. Market logically moves into something where it can where it's a good place to exit, if you like, and then from there it's just about people's entering the market because it's a good place to sell. So it's kind of self-fulfilling. In terms of what we're looking at right now, we're dealing with a little bit of support, tiny bit of support, which is as much to do with this structural high here at the 1.16 level, and I'm interested to see how this might play out. What is key, and this is really, really important, the last time I spoke about Euro, which was actually last week, the level that we were really going to have problems with was the 1.17 level, and mostly because that was to do with the fact that the market had got above the 50 EMA, and was this 50 EMA going to continue to hold as support, or was price action going to break it? And in the end, it also became about the 1.17 level being a pretty key element. So there was a number of factors at this level which did mean that if the market did break it, then that did somewhat imply that there was increased selling in this market, more commitment to selling, if you like. So that's why I can kind of say it's taken a lot of effort to get through this level. So to see it moving down to here is not really, in my opinion, a big ask. However, we'll have to see how that comes out, because that's a whole month, that's a whole 4 weeks, and I can't really predict that far ahead without looking at it on a week-by-week basis. So let's go to the weekly and have a look at what we've got here. And this, of course, is just the detail of what we've just been looking at. So obviously it's going to have many more bars, and you'll be able to see in a little bit more detail some of the cyclicity which has been going on. So you've had your moves, you had a gap up, actually, pull back, push up, pull back, push up, pull back. So we've been in an uptrend, and basically from this point on, as denoted by the fact that we smacked into the round number of 1.21, and we also connected with the 200 EMA on the monthly, we've been in a sell-off period. And as you can see, this depth of sell-off period is not the same as the kind of pullbacks we've been seeing previously. So this implied to me, and the reason why I'm telling you this is because I think it's important to know that there is information that you can read that gives you some insight as to where the shift is coming. It's not just because it's going up, it's going to carry on going up. This was increased selling, this whole area here. We'd then gone from using the 10 EMA as support to now being underneath it. So a lot of that implied a change of commitment to direction. And we had a little bit of a push up, didn't quite make it into the 1.19 level. And from here we've sold off. So in very, very simple terms again, sell off, pull back, sell off. So we're now in what I would describe as the second leg of this particular process. So if this was the sell-off period, this is a pullback, we're now possibly in the second leg process, which could theoretically then mean, seeing as prices closed below the 200 and the 20, we're now below the 10 EMA, which is beginning to curve above price action and act more like resistance than support. We could theoretically, as I say, connect down to the 1.14 level, which also connects with this 50 EMA, which is coming underneath. So we've got the 10 EMA on the monthly that's coming up at the 1.14 level. We've got the 50 on the weekly. In terms of structural points, there is, aside from these wicks that we've got above us, there is something about the way that this market has opened to close at this level which implies a degree of structural support. And again, as I said, we're connecting with the 38.2% fib retracement. So this to me implies, although we have stopped this week, the week just passed, at the 1.16 level, it's closed below here, the 200 EMA and the 20 EMA actually. So I potentially can see a little bit more selling in this. Now, just as a caveat, EMAs are known for producing bounces, so it's possible that this market might have to do a bit of a return journey to connect with the 1700 level, which was the level to break. might have to go and reconnect with that in order to sell back down. So what we could then find is that we spend the first couple of days in a minor buying mode, and then we finish off the week having sold through and making a new low, potentially down to 1.15 down here. I'm not necessarily implying we're going to get down to 1.14 this week, but that's my bigger read. So in this case, I need to quickly look at the daily just to give a little bit of insight into this. So as far as we're concerned here, some of you may recognize this as a head and shoulders, this is the shoulder, this is the head, this is the shoulder. I mean, I know we've got multiple kind of moves within this, but theoretically the high points are the ones that we need to reference, and in any case what we did end up with is lower highs, which is not really what you'd expect to see if you wanted to continue what was a little bit of a bullish upsurge into resistance. If that was going to continue, we would have had to have seen at least a connection with 1900 in order to then visualize potentially a higher low again to attack this level. We didn't get that. Every time it got anywhere near this, it just kept getting lower highs. So that in itself was pretty bearish. We've now made whole new ground, if you like, and that was really about breaking the 1.17 level. We've got a new low. So we're now high followed by lower low, lower high here, lower high, lower high, and a new low here. So this is lower than these and that, obviously. And this is where I am thinking that we may need to spend a little bit of time, i.e. a day or two, maybe bouncing up a tiny bit, connect with the underneath of these bars here. So 1670, the 1.1675 level, maybe even up into 17, but maybe a little bit of pullback, if you like, on the daily, bullish pullback, and then we might see an opportunity where price connects with 10 EMA or maybe something on the 4-hour chart, which gives it the impetus to continue this process of sell-off, pullback, etc. I'm not saying how many I think there will be, but be prepared for a tiny bounce, theoretically, and then we're looking for price to have broken the 1.16 level. And I don't see this as a major level in itself, but it's where the market has decided to connect with in terms of where it might need to take a pause. So this is really about potentially sellers taking an exit point at 1.16, and theoretically that could induce a little bit of buying to the upside, but really the price that we're trying to get to is the 1.15, and then of course the 1.14 level. So I'm thinking maybe this week we might cover this kind of ground, but it could mean initial buying followed by a sell-off where we do actually create a new low into 1.15. Okay, so that's how I'm reading Eurodollar and dollar yen for this week, and I'll be back next week to talk about something else. It might even be the same pairs. I generally like to talk about things which are either interesting and convey an idea that needs illustrating, or they are markets which have got very clear direction. Okay, thank you very much, guys. I look forward to speaking to you again. Take care. Bye bye.